What's up everybody, it's Prashant here. Welcome to my YouTube channel and thank you for joining me today. I'm going to be honest with you guys, I got the idea for this video after I watched Graham's video, the $78 Tesla. I think he made a fantastic video and I've watched it several times over the years and I think you should too, but after this video. So I'm sure you've heard many people say before that owning your own home is one of the best things you can do when it comes to personal finance. I agree with this statement and I even made a video explaining exactly why I think owning your home is a great idea. However, sometimes home ownership can cost a little bit more or even a lot more than you thought it would upfront. So with that, I'm going to explain to you exactly how I own my own home for just $132 a month, and I'm going to break down all of my costs to be completely transparent and upfront with you guys. Alright, let's get into it right after you subscribe to this channel and smash the like button for the YouTube algorithm. Now I'm sure you've heard many people on YouTube explaining exactly how to live in a house for cheap or even for free, and they're all talking about house hacking. If you don't know what this means, house hacking is when you buy a home, a condo, or a duplex, live in a room, and then rent out the remaining space to other people, usually by the room. The rent that you collect from all of these other people is typically, or hopefully at least, sufficient to cover all of your expenses, including your mortgage payment, your HOA fees, any taxes, and any repairs. I think this is a great idea. House hacking is awesome and is something that everybody should consider, especially when they're young and having roommates is not such a bad deal. In my case, however, I did not house hack. Shortly after I bought my condo, I got married and my wife moved in, and we did not really want to do house hacking. In fact, I remember that I suggested it right at the beginning, but my wife vetoed that idea right away. Bummer. Anyway, let's get to the numbers. I bought my condo in May of 2019 for $285,500. When I bought the place, I'd been looking for a place for a few months and I'd already seen about 20 places in person and more than 100 online. Originally, I was looking to buy a 2-bedroom, 1-bathroom condo in the Chicagoland area for about $225,000 to $250,000. But my family convinced me to upgrade a little bit and go with a 2-bedroom, 2-bathroom place. Obviously, I had to increase my budget to be able to accommodate this. The place I bought got listed on Friday night and I was one of the first people to see it on a Saturday. And I made my offer later that afternoon, the same day on Saturday, and the sellers accepted my offer by late evening on Saturday. So we were under contract in just one day. The condo I got was listed for $285,500 and I decided to go with the list price on this because I was in a somewhat competitive market and I knew that this place had everything that I was looking for. My agent and I both felt that this house was going to get multiple offers and potentially get into a bidding war. The sellers were also looking for a longer 60-day close so that they could buy their next house and move into that, which I also accepted. I did this to make sure that my offer was the most competitive it could be without offering extra money. Luckily, my offer got accepted. The next few days were just all about getting an inspection, doing some final negotiations, getting a mortgage, and then finally closing on the property. I believe I got about $1,000 in seller's credits towards some repairs that had to be done to the property, and they also bought a $500 home warranty for us. I put down $1,000 as my initial earnest money with my offer and a second earnest money of $9,000, both of which eventually became part of my down payment. I decided to go with a 20% down payment because I did not want to pay mortgage insurance. To cover the remainder of my closing costs as well as my down payment, I wired $52,500 to the title company a few days before closing. At closing, I got a refund of $1,623 from the title company because I had an overage, which is actually pretty common. And I also got a buyer's refund from Redfin for $514. So overall, I spent $60,398 upfront to buy my condo, including all the fees as well as my down payment. So that was the upfront expenditure of me buying my home. Next up, I'm going to be telling you about the recurring costs of owning my home. I got a mortgage with a 15-year term with an interest rate of 3.75%. My monthly payment was $2,063.27, which included an escrow of $402.29 to cover my property taxes. My principal and interest was $1,660.98. After a bit over a year, when interest rates started falling further, I was able to refinance and get into another 15-year term mortgage at just 2.5%. I also chose to get rid of the escrow payment and just pay the property taxes out of pocket. So now my payment became $1,423.93, which was all going towards principal and interest. Over the 30-month period that I owned the home, I paid a total of $15,570.75 in mortgage interest and about $25,318 towards principal. Now we've got to talk about property taxes. For 2019, my property taxes were $4,653.24. For 2020, they were $4,812.94. And now the property taxes actually went up a lot in 2021. My property taxes prorated to October 30th were $4,342.31. Just when you think I'm about done, you have to remember I was in a condo and those come with HOA fees. Now, I thought my HOA fees were actually pretty low. HOA fees for comparable buildings in my area were about $250 at the low end, but my HOA fees were only $169 a month. Over the 30-month period that I owned the home, I spent a total of $5,070 in HOA fees. That sounds like a lot, and it is. But remember, that comes with some utilities paid for. For example, my trash and recycling was paid for, my water and sewage bill was paid for, and it paid for the building insurance. That meant that my condo insurance was less than $30. Usually when you own a single family home, your insurance is in excess of $100. So the HOA fees definitely paid for some bills. And now you must be thinking, well, that's it, that's all the expenses. And you would be wrong. Unfortunately, when you own your own home, you have to take care of it. You have to make repairs to it. When you rent your home and something breaks down, you just call your landlord and they send someone over to fix it. But when you're a homeowner, you have to pay for all of that yourselves, right? Now, luckily, the place did not need a lot of repairs and I was able to do most of the smaller repairs as well as some of the upgrades that I did myself. Now, mostly what I did was painted the baseboards, the trims, the doors and windows, and I built out the closets. Now, twice we had to pay to get our sewer line cleaned out. What happens in these older buildings, my building was actually from 1905 original construction, I think, or maybe 1915. Either way, more than 100 years old. And they used to have clay pipes for sewage. And what happens with that is when there's trees growing around, the roots will go through the clay pipes and they will actually clog it. And that can cause a backup. And that's what happened to us twice in that time frame that I owned the place. So we had to pay for a plumbing company to route that out. So all in all, over the 30-month period in repairs and everything else, I spent about $1,800. So let's add it all up. Purchase costs including down payment, $60,398.15. Taxes, $9,381.80. HOA fees, $5,000.70. Interest, $15,572.75, and repairs $1,800 for a grand total of $92,172.70. Now, if we divide this number by 30 months, we get $3,072.42, which seems respectable but still higher than renting. But wait a minute, the $92,172 that I spent in owning the home includes a bunch of equity. Now, when I have to take out the equity, this is a little bit harder. I have to sell the home, right? And it's really hard to determine exactly what a house is worth because you have to put it on the market and sell it, and that's what it's worth. Because you can make an assumption based on a Zillow estimate or a Redfin estimate, but that's not actually the market price. Well, lucky for us, I actually just sold my condo. We just finished a cross-country move where we sold our place in Chicago, and now we're living in the Seattle area where we're actively looking for a house to buy. So let's get into the selling numbers. I listed the condo for $315,000, and after being on the market for 11 days, we got an offer for $285,000, which was $500 less than what I bought it for 2.5 years ago. Obviously, I was not about to accept this offer, and we got into the negotiating phase. After a few days of going back and forth, I agreed to a price of $303,000. After the inspection, I agreed to credits of $500, and I also offered credits of $450 to go towards a home warranty during the negotiation phase. So for a total of credits of $950. I also had to pay 2.5% buyer's agent commission, which was $7,575, and 1.5% seller's agent commission, $4,545. Prorated property tax credits for 2021 of $4,344.90, title fees of $3,786.50, legal fees of $400 for my attorney, for a total of selling fees of $21,000 $584.40. So removing all the selling fees from my sale price, we get $281,415.60. At the time of the sale, I owed $202,225.61. So removing the loan payoff, I was left with $79,189.99. If I subtract my total 30-month expenditure of owning this home of $92,172.70 from this amount, we get negative $12,982.71. But remember, the HOA fees that I paid actually paid for a bunch of utilities. So I'm going to add that back in. When I add that back in, we get negative $7,912.71. So this is the grand total. This is how much money I spent on housing over a period of 30 months. Now, dividing this by 30 months, we get the amount $263.76 per month. So including all of the extra expenses that you might not have thought of, including the mortgage, the repairs, the taxes, the selling costs, I ended up spending only $263.76 per month to own this home. I think this is an incredibly low amount, especially considering that this was the expenditure split among 2 adults. So per adult, it was only $131.88, or basically $132 per month. Now let us compare this number to what it would cost to rent this place instead. Both the units below me and above me were rented for about $2,200 to $2,400. So let's use $2,200 for an example just to be conservative. Over a 30-month period at $2,200 per month, I would have spent $66,000 in rent. $66,000! And that is assuming that my rent does not go up. So instead of spending $66,000 on rent, I owned it for just $7,912.71. So I ended up saving $58,087.29 over a 30-month period. All I had to do was convince a bank that I was a responsible person that could be trusted with owning a home, and I made all of my payments on time. This is why I'm such a big proponent of buying your home instead of renting. Once you factor in the equity that you'll build, you'll find that you will save a lot more money over just renting your place. If you want to buy your first home, you can watch my video where I explain step by step how you can go about doing that. So go ahead and watch that video next. So that's all I have for you guys in today's video. I hope you found this video useful and interesting, and if you did, please go ahead and smash that like button and subscribe to this channel. Also go ahead and share this video with some of your friends who might be on the fence between renting and owning their home. I think this will help them out a lot, and obviously it will help this channel grow as well. Also go ahead and click on the bell icon to be notified instantly when I post a new video. I try to post at least 2 videos every week with great new financial content, and I would love to see you back here on this channel. Thank you so much for watching, and see you next time.